Ladies and gentlemen, thank you for taking the time to be with us today and welcome to the In-House Counsel Forum program and our third webinar in the series. My name is Bija Rajinkya and I'm a partner in Khetan's Direct Tax Practice. I would like to extend a very warm welcome to each one of you for joining us in our webinar today. To introduce our In-House Counsel Forum program, it is a forum which is designed to provide training and education in legal operations, business, management, and substantive law areas to general counsel and their in-house counsel teams, as well as a discussion forum on contemporary issues relevant to the in-house community in India and overseas. Our topic today is managing taxation disputes. On this slide is the agenda for today's program. In summary, we will have a presentation followed by question answers with audience questions too. We have already received several audience questions, and if you do have questions, please submit them using the facility provided. If we cannot cover all the questions during the webinar, we will respond offline by email after the webinar. Also, please note that a copy of the presentation, summary notes of the discussion, and the recordings of the webinar will be sent to each one of you after the webinar. Today's session focuses on a critical and often high-stakes area for all business operations in India: managing direct taxation disputes. As tax authorities globally and especially in India become more assertive and the litigation landscape grows increasingly complex, it is essential for general counsel, CFOs, and tax teams alike to proactively manage tax disputes, defend assessments, and achieve favorable outcomes in disputes. Our aim today is to provide you with practical insights into managing tax disputes, from assessment through appeal, from our expert Sanjay Sangvi, who brings a wealth of experience navigating these issues on behalf of corporates and individuals alike across industries. I again invite you to engage actively. Please feel free to post questions throughout the session. Everyone who has registered for this webinar should have received by email Sanjay's credentials to talk on today's topic, so I will not spend much time introducing him. Suffice to say, he's an absolute expert in the subject, leading our tax litigation practice and qualified to express views on these issues. So now I would request Sanjay to take the floor and commence the presentation. Thank you.
Thank you very much, Vijay. Thank you. Hi, good afternoon, ladies and gentlemen. Welcome to this very interesting webinar on managing tax disputes in India. And thank you very much for taking out time for being with us today on this very interesting session. So let me begin with the structure of this webinar, what we are going to discuss. We'll cover a brief introduction of tax environment in India. What is the tax dispute cycle within the Indian tax system? What are 4 or 5 critical areas where your role as in-house GC is very, very significant to your business enterprise and to your tax team? And finally, conclusion, drawing some very important strategies approach, which one will find useful when you are dragged into litigation, how to effectively contain them. So here, next slide, please. So this is briefly about tax dispute cycles in India. This is how it works in India. It all starts with a tax officer. When you file tax return for your business entity, it is picked up for tax scrutiny, or even otherwise based on some third party inputs. They may send you a notice asking for certain clarifications, submissions, or a personal appearance before the tax authorities. The starting point is tax officer. After your tax audit or tax assessment is completed, if you are not happy with the order for some factual or legal reason, you have an ability to file an appeal before Commissioner of Income Tax Appeals, which is the first appellate authority. Or if you are the taxpayer is a foreign company or an Indian company having transfer pricing related disputes, then you have a choice to approach dispute resolution panel, DRP in short, as a for Commissioner of Income Tax Appeals. After the commissioner appeal or dispute resolution panel proceedings are over, if you wish to file a second appeal, you have to approach Income Tax Appellate Tribunal. Interestingly, Income Tax Appellate Tribunal is the final fact-finding authority in India within the tax law. So whatever finding of fact is written by the tax tribunal, that will be treated as final even by the Supreme Court of India, unless such finding is proved to be perverse or erroneous. After tax tribunal, the next level is high courts. A taxpayer or revenue authorities, they can file appeal before high court, concerned jurisdictional high court, if the appeal involves substantial question of law. And of course, the finally after high court, one can approach Supreme Court of India to file an appeal. A brief flavor of how much time every stage will typically take. So if you are before tax officer, it can take 2 to 3 years to complete your tax audit, your tax assessment. Once you file an appeal before commissioner appeal, it on an average it takes 2 to 3 years. And if you choose to go before dispute resolution panel, it will take 9 months to 12 months. Within 1 year, they have to statutorily wrap it up. Before tribunal, it can take anywhere from 1 year to 2 years. High court is 2 to 5 years, depends on you are before which high court. Some high courts in the country, they have huge pendency. So obviously they will take more time to admit and dispose of your appeals. And some high courts have relatively less pendency, so disposal will be quicker. But 2 to 5 years is a fair estimate based on our experience. Before Supreme Court, it takes anywhere from 4 years to 6 years, starting from your first stage of filing the appeal, admission of appeal, and then final disposal of appeal. So there is a time lag between acceptance of your appeal or permit giving you a grant to file an appeal before Supreme Court. And once that stage is crossed, finally Supreme Court will list the matter for hearing on merits and final adjudication or ruling. So anywhere between 4 to 6 years. Next slide, please. These are three key reasons, three areas where one will typically end up in tax dispute. One is tax audit, which is also known as tax assessment. Second is reopening of a completed assessment, and third is revision of a completed assessment. So what is the most important thing that a GC should keep in mind when you are facing a tax audit, or you are facing a reopening notice, or you are dealing with a revision of complete assessment notice? In our experience, in our view, the first and foremost strategy remains to be merit assessment of the concern issue, whether you are facing tax audit, dealing with reopening of assessment, or you are dealing with revision of assessment. Please discuss with your tax team, reach out to your tax lawyers, and undertake a quick merit assessment, meaning whether the claim that you have lodged in your tax return is justified in law, or what revenue authorities are proposing that is more in accordance with law. So once you have clarity on merit assessment, you are ready to devise a strategy how to approach the tax proceedings or tax dispute. So merit assessment is the fundamental thing in our view. Once you have done the merit assessment, let's say you are dealing with a notice for reopening of a completed assessment. So in the original assessment, queries were raised by the tax officer, proper responses were filed, discussion took place, and after hearing you, after looking into your written explanation, he was satisfied with your claim for deduction or your claim for non-taxability of certain receipts, and he passed a clean and neat assessment order. And now for some reason they have a change of mind, they want to have a fresh look to your completed assessment, they issue a reopening notice. In such a case, second most important step for you as a GC is to consider whether it is more appropriate to participate in the notice for reopening by filing submissions, arguing, seeking clarification, seeking personal hearing, or it is more advantageous to consider filing a writ petition before the concerned High Court. Why I'm emphasizing this point of tax proceedings versus writ petition? Let's say, despite doing merit assessment, when you reach a fair conclusion with your tax team and your tax lawyers that we have a strong case on merits and there is no real legally justified case for reopening, and you decide, let's say, to proceed, participate in the proceeding and try and impress upon them that please drop the proceeding, it is not valid. Let's say for some reason, despite your best effort, they still proceed and make a reassessment of your completed assessment by making huge additions. You will have to then file an appeal before Commissioner of Income Tax Appeals. But for filing the appeal, you will have to deposit 20% of the disputed tax demand. So you will be faced with a huge cash flow issue. There comes this strategic approach of participating in the proceedings versus filing a writ petition. So after your merit assessment, the conclusion is that you are very strong on merit, and the impugned notice, the concerned notice seeking reopening of the assessment is patently bad in law, either for jurisdictional reason, or it is time bound, or it is based on mere change of opinion. So then in such cases, it may be worthwhile to file a writ petition before the concerned High Court, highlight these legal issues, and demonstrate before the court that this notice is patently illegal, and therefore why should I go through the harassment of participating in the proceedings, and having done my best, if they still don't listen to us, they will pass an adverse order which is bad in law otherwise, and I will be asked to deposit 20% of the huge tax demand which they are likely to create, and then only I can file an appeal. So if something is wrong, legally wrong at the threshold, why should I be made to suffer from the whole process of participating in the proceeding and then going through appeals, first appeal, second appeal, before I could eventually reach the High Court? We have seen several cases. In few cases we were personally involved, and we actually advised client to consider filing writ petition rather than participating in proceedings. And happy to share, in all most of those cases we were successful in High Court appreciated the legal proposition that we were highlighting, and they also appreciated the patent illegality in the notices, or high pitch assessment notices, and they quashed the reopening notices. So you can save a lot of unnecessary trouble if you are justified to go down the writ petition route. Another important point, whatever communication you are doing with the tax authorities, your engagement with the tax authorities should be by way of written responses. Please don't leave it to only oral communication, oral argument. There is no account of oral arguments. So whatever you wish to say in terms of your facts, law, judicial rulings, supporting rulings, reference to or reliance on legal documents, please file them by way of a proper written submission. And once the detailed submissions are filed capturing your facts, law, sequence, relevant court rulings, please also file in the same set of documents, same written submission, an executive summary of your key propositions. If the submissions are a bit lengthy, maybe justifiably, but it's good to prepare 1 or 1.5 pager executive summary that gives a bird's eye view to the authorities concerned to understand the merits of your case. After filing proper written submission, the next proper course of action would be to have an effective and personal representation before the tax authorities. So if having filed your written submission, if you appear before them, personally explain your case in terms of facts and legal merits, you stand a better chance that they are more likely to be receptive to what you are saying in writing and in personal hearing, and you are more likely to get a fair deal, a fair adjudication from the tax authorities. Meaning, put it differently, a proper representation personally before the tax authorities along with the written arguments give you better chance to, in most of the cases, to put an end to a potential litigation. Many times, despite our best efforts of filing detailed submissions, appearing before the authorities, highlighting the relevant point, they are still have a kind of closed mind. The officer may not really appreciate or may not be willing to listen to you for whatever reason. What do you do in such cases? Our suggestion, what we have found useful, we did this in last couple of months, at least in two cases. We sought interference of senior officer, the direct higher reporting authority of the concerned officer. We got his involvement in the matter. We briefed him of the matter that this is the notice, this is the dispute, these are the queries or contentions raised by the concerned officer. This is our say in response to that in terms of facts, law, legal documents, and so on. So if you can please have a discussion with the officer, your junior officer, and ask him to follow the facts and law and settle judicial positions. So income tax law has a very interesting provision which gives an ability to tax authorities to seek official interference of higher ups in a case where you feel that matter is not proceeding in the right direction in accordance with law. So that's the benefit available. So strategically involve senior officer where you feel a need for that, especially when the stakes are very high. At times, the matter may involve technical issues like valuation of business. There is a purchase and sale of business that your company would have done, and there is some disputes around surrounding what was the fair value of business. Did you purchase at fair value, or you paid less than what ought to have been paid? So whether you have benefited in the process, the business was worth 100 million, you bought it only at 80 million. So whether 20 million is your taxable business income in the form of saving. So in such cases, it is quite advisable to obtain experts valuation report like a practicing chartered accountant or a merchant banker and so on. So if you bring on record expert opinion, it also eases the matter. It helps officer also to have a better appreciation of your point of view. Last but not the least, please keep the matter low profile. Do not talk to media, do not make it high profile, and also do not involve too many officers in that range when you are dealing with a particular matter. Of course, as I just said, that sometimes it is helpful to involve his immediate senior if the matter so warrants. But barring that, is better. There's huge value if you keep your matter low profile. Just deal with that officer by way of proper written submission, proper appearance, satisfying all the queries, etc. in writing, with demonstrating substance of your case, why you are saying is why you are justifying whatever you are saying. So bring court rulings on record and so on. Try and keep it low profile. It is very helpful. Next slide, please. In case you are dealing with transfer pricing dispute, I may share on this forum, roughly 55 to 60% of tax disputes in India, direct tax dispute in India, centers around transfer pricing and interest and taxation. So therefore, having a strategic approach, a technical approach in dealing with transfer pricing related disputes and notices is very important. So what should you do as a GC, as a general counsel, when you are facing a transfer pricing dispute? And obviously you will work with your in-house tax team and your tax lawyers, that goes without saying. So first and foremost, we would believe that you should familiarize yourself with your global transfer pricing policy. Let's say you are working for an Indian subsidiary of a US based MNC. You are GC of an Indian subsidiary. So please get in touch with your head office in USA. Find out what is their global transfer pricing policy, meaning let's say Indian entity of which you are a GC or with which you are dealing or you are responsible for, what kind of business transaction it has done with its foreign parent in USA, whether it has sourced some services, it has made some purchase of raw material, purchase of equipments, or there's an IP transaction and so on. So please try and find out through your head office for such transaction what is the global stand of your parent entity, whether they, what kind of transfer pricing method they are following. Is it cost plus 10-15% and so on? That's number one. Number two, please also try and find out from your head office in foreign jurisdiction what is your transfer pricing dispute history in that jurisdiction. So let's say Indian subsidiary, your entity, your legal entity has made payment to foreign entity by way of royalty. Let's say 10% royalty for some IP transaction. Whether that 10% payment by India to USA has been accepted as a fair arm's length price by the transfer pricing authorities of the foreign parent in USA. So if it has been treated and accepted as a fair price, then you can demonstrate, you can bring that before the Indian transfer pricing officer to persuade him to accept your 10% payment as a fair price for the IP services you have taken, meaning it's a proper arm's length price. So that gives you an additional advantage of trying to put an end to any potential dispute on the transfer pricing if in your counterpart jurisdiction whatever payment you have made has been accepted as a fair payment, as an arm's length payment by tax authorities of that jurisdiction. So knowing your transfer pricing assessment position in other jurisdiction will also, you will find it very helpful when you prepare your submission for your transfer pricing officer here. Please, third point, please also familiarize yourself with your transfer pricing study report. So for any transfer pricing matter, when you do deal with your foreign enterprise, foreign related enterprises, what is called associated enterprise in transfer pricing regulation, you should be fairly aware of what are the interested transactions that your company has carried out with foreign related parties, what kind of benchmarking principle has been followed, which in accepted transfer pricing methods have been adopted to arrive at arm's length price. So once you have a fair idea, your ability to prepare and present a proper defense goes up manifold. Next point, despite your best efforts, if you feel that matter is still getting dragged into litigation, you have an option of signing advance pricing agreement with transfer pricing authorities. APA is a highly valuable alternate dispute resolution mechanism provided by Government of India for foreign MNCs and Indian arm of foreign MNC if there is a transfer pricing dispute. So basically under advance pricing agreement, as the name suggests, in advance you agree with the transfer pricing authorities that you are going to do 1, 2, 3, 4, 5, these specific 4, 5 or whatever number of transactions, a certain specified interested transaction with your related parties, whether it's supply of goods, sourcing of services, IP transaction, and so on, or cost sharing arrangement. Those specific transactions, you please make you can make an application to the advanced pricing authority commissioner, setting out this what are your interested transactions you are proposing to carry on or carry out going forward, what kind of transfer pricing methodology you will apply to arrive at arm's length price of such transaction. If your application is found meritorious by tax authorities, they will be happy to sign APA. Once the APA is signed, it is binding on you as a taxpayer, as an applicant, and binding on income tax authorities, including transfer pricing authorities, for the transaction interested transactions covered in that advance pricing agreement. So for those specified covered interested transactions, whatever arm's length price is set out in the APA, or whatever method is accepted as a valid method to arrive or compute APA in future, once you do those transactions, that becomes binding on tax authorities. To sign APA is an insurance, it's a guarantee that your transfer pricing dispute for next 5 years for those specified transactions will be nil. They are duty bound to faithfully accept that advance pricing agreement and complete your transfer pricing assessment on that basis. Additional advantage of APA is that it not only protects you for subsequent 5 years, it can also be applied for previous 4 years. So if for some reason your earlier 4 years transfer pricing audits are pending at some stage in appeal or before dispute resolution panel and involving some or all of the same transaction which you have covered under APA, then the principles applied in APA can be relied upon for those previous 4 years, and tax authorities will be more than happy to accept that proposition. So in effect, in one APA, you are able to cover your 9 years potential dispute, 5 years going forward and 4 years previous years disputes. So there's a huge value in seriously considering advanced pricing agreement. Presently, we are working for a very large US group on a bilateral advanced pricing agreement. And the process is very smooth, and we are very sure that once we are able to strike that bilateral advanced pricing agreement between India and US, the tax authorities of India and the transfer pricing authorities of USA, the group which was under a lot of disputes on transfer pricing, it will virtually be transfer pricing dispute free. So worthwhile to consider APA. Next slide, please. Another area of tax dispute is that many times you will receive notices from tax authorities asking for certain legal documents. A very conventional example will be that, let's say your group, your Indian subsidiary, your foreign parent has done some international merger acquisition. You have bought a global business, or your group as such has sold some global business, and that also involves India lag. So if there's a global acquisition, there's acquisition India, or there's a global sale of business, more likely that an Indian business will also be part of that global sale. So they will learn about your international transaction global deal, maybe through media, newspapers, on internet, and so on. They may reach out to you asking for a copy of your share purchase agreement or share transfer agreement or shareholders agreement. They may want to examine whether this global deal has any India specific tax implications. That is normally their main interest of issuing notices in such cases. What should you do as a GC when you receive such notice? So of course, in consultation with your in-house tax team, tax colleagues, you will try and find out what is the real essence of this notice. Is it a kind of regular notice, or there are some strategic points tax authorities may eventually direct themselves to proceed in that direction? So your response to such notice should be done in a guided manner, in a strategic manner. So do consult your tax lawyers and have some kind of foresight to see. Let's say they've asked for they may not say you give us your global share purchase agreement. They will give us your transaction documents or legal documents for this global deal that you have done. Then you need to make a determination along with your tax team and your tax counsel whether at the first sight you should be giving them a copy of global share purchase agreement, which will have your entire details data of the deal that you have just done, or it may suffice if for the time being to start with you only give India specific SPA. Many times when we as tax lawyers we work with our corporate M&A team, we always advise our corporate colleagues and our foreign client that if there is a huge global deal, please also have a condensed version of SPA, typically called India specific SPA, which will capture what Indian business was transferred at what price it was transferred, on what date it was transferred, and so on. So it will not have your global data there. Why you want to expose your global data to the tax authority? Because many times it may not be really relevant for them to look at your global SPA, but if that is before them, it gives them a chance, gives them some scope to raise issues on the price that you consideration that you allocate to your Indian business. Let's say you've done global sale of business of your group at 1 billion US dollars, and out of 1 billion US dollar, let's say 100 million is allocated towards value of India business. So if you file global SPA with the tax authorities and they see that the global bill is at 1 billion US dollars, India specific valuation is 100 million, they will raise several questions. Can you please justify why only 100 million is allocated to Indian business, whereas it generates more business? There's a huge sale, there's a huge value proposition. Why it should not be 200 millions or 300 million? So they will start questioning the legality and tax validity of your economic parameters and your commercial consideration. So please make a strategic determination in a guarded manner whether when you respond to the notice, should you give everything at one go or you give in a piecemeal manner without, of course, rubbing them on the wrong side. There is no question of hiding details from tax authorities when they are asking for it in a written notice, but you still have a chance to work in a guided manner. And many a times filing a India specific SPA may do the work and they may not ask for global SPA. And we have done that in one particular case for a German group. Of course, we have to file the response within the notice, within the time period prescribed in the notice. Be very respectful in your communication with the tax authority and in a guarded manner. Another important point in this context will be try and anticipate what further questions can come up from the tax authorities. So this notice may be an initial notice in their minds, and depending on what response we are filing, they may come up with a further query. So just to give a live example, we were dealing with a Fortune 500 group about just before the COVID in 2018, 2019. So they did huge transactions in on Indian soil and on high sea, and in our view they were on right side of law. Their understanding of Indian action control regulation was proper, and in that basis they were doing transactions with India involving billions of dollars. Somehow tax authorities, they were of the view that their business model was in contradiction with the spirit of concerned action control regulations administered by Reserve Bank of India, and they started huge transfer pricing proceedings saying that your transactions are not valid, they violate the Indian action control regulation. Therefore, the price that you have paid to your foreign enterprise is not arm's length, it should have been something more, this and that. So huge litigation. And as I suggested, so after the approaches, we did merit assessment, and on merit assessment, our view was that their understanding of action control regulation was proper and justified. Their way of business model was justified. There was no violation of any kind of action control regulation, so on. But the tax authorities, they had made up their mind that in their view this is not correct, and they wanted to make a huge transfer pricing addition in the assessment order they proposed to pass. And they said, fine, you fight in, you go in appeal and you fight it out. In our view, your business model is not in compliance with Indian action control regulation. So as I said earlier, it pays well. It pays. There's a huge value if you proactively engage with tax authorities in terms of effective representation. So we used to periodically go and meet the transfer pricing authorities for this particular matter, and we were trying to impress upon them with proper justification, interpretation of law, documentary evidence, experts' opinion that this is the correct way of looking at this particular nature of business transaction. There is no wrongdoing. Now that officer happened to be a known officer because we had appeared before him for some other clients 2 3 years ago. So there was some kind of goodwill we had built with them. So I can share on this forum. So they also in a subtle way dropped some hint that Mr. Sanvi, this matter may not end here. We may take it little further, maybe a little harsher with this group because we strongly believe that the business model is not correct. And next day morning there was an income tax raid on that group. So you have to anticipate what further inquiries, questions, or actions can follow from the tax authority. So therefore, it is very important that you have a strategic approach in terms of filing your responses and build trust with them. It pays to build trust with tax authorities. So when you build a trust with them by filing timely responses, proper responses, not in a vague manner, then they also feel inclined to listen to you with an open mind. If they have a difference of opinion, they try and close the matter, or at least even if they are holding on to their point of view, which may not be fully legally justified, the damage can be contained. Next slide, please. Another form of potential tax dispute that we have seen often working with clients is notice or summons issued by tax authorities for personal appearance of key management personnel. Again, very important. Your role is very important when they call key management personnel to the tax office to interview them, to interrogate them. Your contribution, your legal expertise becomes very useful. So we have seen in many cases, time to time, either they will call head of tax, which is absolutely fine because the head of tax, CFO or tax head or tax manager, they are quite familiar with your tax matters, tax proceedings as a business. But sometimes they also call in addition to tax head or CFO, or instead of CFO, chief financial officer, the other want to meet your CEO or managing director, and they want to directly question them on your business models and some alleged tax wrongdoing. I will say alleged tax wrongdoing because of difference of opinion, the way you interpret the law, and or the way you carried out certain business transactions, and the way tax inspector they are looking at those transactions. So what do you do in such cases when you are facing a law dealing with a notice for appearance, personal appearance of key management personnel? First and foremost, assess the legal validity and context of the notice. Meaning thereby, can you make a request to tax authority that, sir, instead of calling for appearance of my MD, can I have my chief financial officer or chief operating officer appear before you, because they are more familiar with my tax proceedings, outstanding tax demand, how the business transactions are done, what was the tax structuring done, what was the tax implication. A CEO, MD is more responsible for driving the overall business of the company. He is not expected to be fully hands-on on your day-to-day tax proceeding. So at times they may agree, okay, instead of MD, please have your CFO appear before me or a COO appear before me. Not that they are will accept such request, but there is a fair amount of probability, maybe 30-40%, that they may listen to your such fair request. After it is decided who will appear before the tax authorities, whether it is CEO, MD, or it is CFO, or it is your chief operating officer or tax manager, or you as general counsel, because you are also privy to your key business transactions, dealings, and so on, because you hold a very responsible position in the company. So please file all responses in writing. Maybe on the first occasion you may not carry anything. You will go there, hear them out. Whatever responses can be given, the person will give then and there. If there are some further queries, answers are not known, you can always come back with a written response and comply with the notices. It also helps to do some kind of mock interview with the concerned person who has to appear before the tax authority. So you can sort of prepare that. Let's say you are presenting your COO before the tax authorities or your MD. So while MD will be fully aware of your business model, market reality, your position of the company in the marketplace and so on. So far as tax proceedings are concerned, you'll be able to give him some inputs that this is the background of this notice. Perhaps this is what they are targeting to examine. So may please kindly keep in view these 4 or 5 important facts or the proposition. So some kind of mock interview helps you in preparing them well for appearing before the tax authorities. Post the interview, please consider preparing an interview memo. So what were the questions asked by the tax authorities? What response was given by your KMP? Please record them in a proper memo. It will be helpful for future references. If there is a further notice for one more appearance or post that personal appearance, there are some tax proceedings taken out by way of reopening notice or revision of assessment notice, that this memo gives you a good handy reference. Last again but not the least, please do ask for an official copy of the statement that they have recorded. You are entitled to get a copy, a Xerox copy of what statement was recorded, what were the exact question to your KMP who was called in person, what responses have been given. All of this you will find in the official copy of the statement recorded. One more important point in this context, please be consistent. Consistency is the most important thing. So when Mr. A had appeared before the authorities, he said something in response to certain questions. It should not happen that later on when you are filing a written responses, we say something else which is in direct contradiction with what was said in person before the tax authorities. Unless of course it was some clerical mistake. Barring that, as long as we are consistent in our verbal responses and in our written responses, you will stand better chance to have an early, expect an early closure of the tax notice. Next slide, please. Another area where you will see a huge tax dispute is income tax rates, what is called income tax search and seizure. This is a very harsh and extreme step that tax authorities take at times in certain cases. So what do you do as GC? What is our suggestion to you when if you are facing an income tax rate, what do you do? Please do not panic as a starting point. Please do not panic. Second, when the search party visits your premises, which will consist of uh, uh, mid-rank officers, senior officers, tax inspectors, at times along with police authorities, they will visit your office premises, your office, your head office, corporate office, your factory, your warehouses, and so on. Your residence also, residence of KMP, CEO, tax head, CFO, sometimes GC. We have seen in one or two cases. So when the search party visits your premises, please verify their authority, their I card, and ask them to show you the search warrant. Unless Director of Income Tax Investigation or Additional Director of Income Tax Investigation issued a valid search warrant, they have no legal authority or ability to enter your premises. So please verify their I card that they are the authorized people from income tax authorities department and they carry validly issued search warrant by the competent authority. Next, please inform, of course, you must inform your tax lawyers immediately. You pass on the message that you have been just now searched, so they are on standby and they can give you help on a real-time basis. Please cooperate with the tax authorities. Income tax search is a heavy action and it results into heavy post-tax proceeding in terms of 6 years assessment, what is called block assessment. So therefore, please cooperate within the limit of reasonableness. So if they are in the course of income tax rate, they are requesting for access to some documents or your computer, your financial transactions, your trial balance, and so on, or your payroll data, as long as the ask is reasonable, which you will be able to judge on the spot then and there, please do cooperate. Please, needless to say, do not destroy or conceal any evidence. This can invite serious legal implication in terms of tax prosecution. So if somebody is found to be concealing some documents there or destroying some legal evidence in the when the search is on, when the raid is on, that person can be prosecuted. And mind you, you will also find police officers present on the premises. If the search is very big, they generally have 2, 3 police officers along with them to avoid any unwarranted situations. They often record statements in the conduct in the course of income tax raids. So the senior management people or senior operational people who are present in the office, whether it is head of accounts, head of tax, GC, we have seen in one or two cases. Very recently, in one case, we have seen a GC statement being recorded by the tax authorities along with the statement of CFO and tax manager. So they will record your statements. So when the statement is being recorded, you are not expected to give all the answers then and there. So instead of making of course not willingly, but instead of making factually wrong statements, please say that I don't have often information, give me 2, 3 days time, I will check with the concerned team and file a written response. So you are in addition to giving some responses, spontaneous responses then and there, which you are able to give, please seek time from the concerned search party who is asking for information. Go back to your concerned team. You can collect the information and then you can file by way of a written response. If in the past there was already an experience of raid on your group, it may be worthwhile to have a raid playbook made out for you through your tax lawyers, which can have some very important do's and don'ts. That these are 10 things you must do when you are facing an income tax raid situation, or these are 8 and 10 points. Please keep them in mind and please do not do those things. For example, not presenting inappropriate person before the search party for statement recording. That person may not have full knowledge. The person may end up making wrong statement which may become later on difficult for you to retract, or even if you seek to retract, they will say no, there's a malified intention, the concerned person has given us this information, we will proceed and complete your tax assessment post search on that basis. So these are some of the points one will be well advised to keep in mind. Next slide, please. So having dealt with these 4 or 5 very often the regular areas which generally creates tax dispute, these are some of the learnings that I would want to share with all of you as GC. Timely engagement with your tax lawyers is most important. It gives you an ability to decide a strategic approach at the outset and prepare your defense or response accordingly. So timely engagement with your tax team and tax lawyers is very, very important. As I said earlier, preparing and filing a written response again has its own value. You have a chance to set out everything in a sequential manner, your facts, your supporting evidence, supporting judicial rulings to have a early closure with the tax authorities. Proper representation before tax authorities, timely and diligent representation before tax authorities is also very, very important. And in a few minutes, I will share a few live examples. Let me club point number 3 and 4 together. Proper representation before tax authorities and proactive approach. We recently acted for a very large Japanese corporation in the month of March for a very large tax audit, income tax audit. And 31st March, as you some of you would know, 31st March 2025 was the last date for closing the tax assessment tax audit for financial year 21-22, which involves some transfer pricing matters. So the stakes were very high. It was more than 4,000 crore, roughly half a billion US dollars. So they were not very clear or satisfied with the source of that remittance which came from Japan, more than 4,000 crore rupees, half a billion US dollars. So they wanted us to satisfy them on source of that fund and the source of that fund, which came to India for purchasing some additional equity from the Indian joint venture partner. That was the context and background of this the tax potential tax dispute or the tax audit. So we appeared 5 to 6 times. Formal notice came only 3 times. 2 or 3 additional hearing we sought on our own. We wanted to make sure that whatever we said in verbal hearings and whatever detailed written responses we have filed in a logical manner, that has really helped him in having a mental clarity that there is no wrongdoing. The money has come from a foreign JV partner. It has come through normal banking channel. The source stands explained. It was a share capital of the Japanese entity plus some usual borrowing they have done in the usual normal course of their business, and the value at which shares were purchased aggregating to more than 4,000 crores. That was in accordance with the Action Control Regulation of India as well as Section 56 of Indian Income Tax Act. So since we proactively engage with the tax authorities, it gave us an ability to persuade and convince the tax authority that what we are saying for our client is justified. There is no wrongdoing, there is no violation of income tax law or the Reserve Bank of India regulations for purchase of shares of an Indian company by a foreign investor. So that really helped the matter, and I can frankly share that on the last hearing that was on Saturday, and following Tuesday was the last date, statutory date for them to limitation for them to complete the assessment. So they said, Mr. Sangvi, we are glad that you personally came 3, 4, 5 times and you sat with us for 2 hours and took us through your entire range of transaction documents, SPA, valuation report, and so on. So that gave us a lot of comfort, and we have decided we will not make an addition. So with this sort of active engagement, sorry, this sort of active engagement with the tax authorities made a huge difference, and eventually we got a neat and clean assessment order. So proper representation and proactive approach is also very, very valuable when you are representing before tax authorities. Yeah, so happy to take any questions.
Yes. Thank you, Sanjay, for an absolutely insightful presentation. It was an absolute delight hearing you. I'm sure our
Thank you.
audience feels much more litigation ready with the fantastic strategy you have laid out. Now, let us take some questions from our audience.
Sure.
Okay, our first question is what are the practical steps should we take immediately upon receipt of a tax audit notice or a show court notice?
I would say get in touch with your tax team. I think obviously you'll work along with your tax team. Then please consult your tax lawyers to decide the strategy and approach in terms of your response that you want to file. Your initial response makes huge difference to how soon and how smoothly your tax audit or a tax notice will be closed. So if you file the proper response in time by giving a meaningful response to tax authorities, and in the very first response, if you're able to build a trust, a mental trust with the concerned authority, it will go a long way in closing the tax audit or a tax notice in a amicable and a rational way, Bijan.
Got it, Sanjay. So, one question which I had before I take the next audience question: would you generally suggest that companies and multinationals undertake an audit of their own positions which they have taken from a tax perspective, so that if at all there is any sort of documentation to be concluded, if there is something which is missing, they can actually act on it?
Absolutely, absolutely. So we have done this for one a very large infrastructure client in I think 3 4 months ago. We undertook a merit assessment come health check. So they were in dispute for good 13 14 years. So they approach us. So we sat down for almost a week along with their internal tax team. They give us access to all their tax file, tax data, tax records. We undertook a legal examination of merits of their case. And I think if my recollection is correct, out of 13 14 items of dispute, on 10 or 11 they were we found them to be very very strong on merits, but on one or two items our view was that they were not quite strong on those things, and our frank advice to client was that you please make a provision for tax demand on those 2 3 items. Please pay off those demand so that at least you're able to stop interest meter. So yes, so it helps. So if you do a proactive merit assessment of your items of dispute, it helps in you taking a balanced view where you should fight it out in appeal to get a resolution, and where you should perhaps consider as a more wiser approach.
Absolutely, thank you. And of course, also sharing with shareholders and stakeholders the correct value of the company itself. That's very,
Absolutely,
very helpful,
absolutely.
Sanjay. Thank you so much for that. Let us move on to the next question, a slightly tricky one indeed. What are the typical mistakes or oversights corporates make during tax audit and assessment process that escalate into a full-fledged disputes? So something which you literally did wrong, which has actually made your position worse.
So again, I give you a live example. Uh, the Japanese entity which I was referring to in $500 million tax audit, it was a reopening. So in the notice, initially notice, they were asked to file SPA. They did not file SPA for some reason. They were working with some accounting firm. I'm not naming them. So they asked for SPA, and instead of filing SPA or other relevant transaction documents, for some reason they decided to file a management certificate that this is what we have done in this financial year. So that did not go down well with the tax authorities, and they proceeded and reopened the assessment, which we got it closed after 5 6 7 hearings. So if they would have filed SPA at the first stage, maybe not global SPA, but India specific SPA. See, as I said, Bijan, and the audience here, it is tax is a serious proceedings. Income Tax Act deals with money and money matters. Tax is a serious proceeding. It can impact your business. It can impact your survival. It can touch upon your reputational risk. It can drag you into reputational risk. So please consider filing a response depending on the context of the notice of the proceeding in a way where it creates trust with the tax authorities. If they get a feeling that either you are not forthcoming in properly giving all the information, or you are holding back to certain important information, so therefore, please judge along with your tax team and tax lawyers, how should we present our response. So do we get, instead of giving full SPA, okay, fine, you begin with India specific SPA, but don't give a certificate by management instead of giving not a full-fledged agreement, a condensed version of agreement. So that simple mistake created a huge reopening proceedings. So somebody may feel, okay, oh, we should have given SPA. It was not given. I'll give you another example. We are actually working for a mid-sized enterprise where the entrepreneur, he did some financial transactions running into 200 300 crores. So he made certain borrowings. He took some money from family, his HUF and so on, and he carried out financial transactions, purchase sale of listed equities, purchase and redemption of mutual fund units and so on. So income tax department system, the infrastructure triggered a notice to him because he dealt with 200 300 crores worth of financial transaction. So a notice was issued by the tax authority, the system, and it went to the concerned officer, his jurisdictional officer, who then issued a formal notice saying that please explain the source of this 300 crore worth of transactions you have done, financial transaction. Now he was called upon to file proper responses. Unfortunately, ideally he should have filed a table, a proper written response with some kind of table, tabular response, which tells that 300 crores was the worth of securities I bought and sold, and this is the source of 300 crores. Let's say 100 crores from my own capital, 100 from my family borrowing, and 100 crores from a bank lending. Instead of giving this proper reconciliation of source of fund, he gave a partial response in terms of reconciliation. Rest he just wrote one or two single brief crisp line that I did some internal borrowing from my family, HUF, and a third party lender. So since the response was vague, the tax authorities proceeded. They made an addition of this properly unexplained amount as unexplained investment, and they raised the demand of some 49 crore rupees. So now that gentleman, that enterprise is into litigation, and we have been called upon to help them. I'm sure we will succeed because ultimately it's a question of fact that this is how I borrowed. But if the response were more considerate, more strategically done, then this situation would not have arisen in the first place. So how you respond to tax authorities at times also decide whether it will proceed further and get culminated into a some kind of negative tax orders, or it will get resolved then and there. So please take some time to reflect on what kind of response you should be filing.
Very helpful, Sanjay. So, a very balanced view on ensuring you don't give too little, don't give too much. So, I guess a
Please,
proper
yeah,
advice would
balancing
lead
act
to
is very
your
important.
absolutely. Sanjay, next question was on reputation and governance. And here is the question. How do we balance aggressive litigation strategy with reputational risk and governance around tax litigation? As an example, should it be reported to the board or the audit committee of a company?
So again, let me very interesting, very practical question. Again, recently we were not recently, but 6 7 months ago, we were approached by a Chinese very large corporate. They were into some disputes, so they did 2 3 consultations with accounting firms, and finally some friends would refer them to us. So they came to us. So we called for, after hearing them in person, we called for certain clarifications. We saw their records, everything, and after that, our clear advice to that group was that you are not on right side of law. There is not enough merits in the position that you have taken. So we would like to suggest that you better concede this dispute, pay the applicable tax with the interest till date, and put an end. Even if you continue pursuing, in our view, you will not succeed even if before High Court or Supreme Court, and you will unnecessarily incur higher interest costs because High Court proceeding will take 5 6 years, Supreme Court will take another 5 6 years. So there will be huge interest costs which will keep adding up. So it may be more wiser to concede. Of course, there are ways to concede. You can draft it properly, but the point was that we did not see merit in pursuing that dispute further, and we felt that it is better close. Either you participate in some available tax dispute settlement scheme if it is available. Otherwise, you, in a guarded manner, you file the response with the tax authority, which we are willing to help you with, and you please accept that point, pay the tax, pay the applicable interest, and put an end. Otherwise, it not only that they would have incurred huge financial cost, Vijay, but it will also come in media that here is a very respected business enterprise, and this is the claim they have lodged in their tax filing, which has been rejected throughout by tax officer, commissioner, high court, tribunal, and Supreme Court. So this is how sometimes you have to also balance your reputational risk. In other
Absolutely,
case,
and governance and reputation has become
yeah,
super important.
absolutely, Vijay, absolutely. And as you rightly said, and the question rightly raises that point, many times issue may be so sensitive, not only in terms of financial stake, but it may be debatable otherwise, and the tax office, let's say tax department in similar case, have taken a very hard stand and matter is in grave dispute. You may need to inform your board and your audit committee that this is the issue we are facing. This is our position. We have consulted our tax team and tax lawyers, and they say that there is decent merit. It may be worth pursuing further in appellate proceeding because stakes are very high. But you must keep your board up to date and inform about such a high stake tax dispute matter. So if tomorrow media approaches them, or they have to do some stock exchange filing, they should have a proper perspective of where they stand in terms of that particular concern tax dispute. Yeah.
Right, right. Oh, thank you so much, Sanjay. Since we are running out of time, I request the audience to send in their queries directly to us and we will surely respond to you. Before
Yes.
closing, I would like to request each of you to respond to the poll slide on your screen and to provide your feedback on today's webinar. We take this very, very seriously as a part of a continuous improvement program. Prajal, can you please put up the poll?
So thank you very much, audience, for being with us on this very interesting session and giving us a patient hearing. Thank you very much. Look forward to receive your additional questions, and we are happy to respond.
Yes. Thank you so much for all of you participating in the poll. We can definitely see that you have all really enjoyed this webinar. I would really like to thank our speaker Sanjay for sharing his expertise and insight with us today. You were simply outstanding, Sanjay. I'm confident our audience has greatly benefited from your talk. Thank you so much on behalf of all our audience. And thank you,
Thank
dear
you.
audience, for your attention and your questions. I hope you found the webinar interesting and a worthwhile investment of your time. We certainly enjoyed bringing it to you. As promised, we will send you a copy of today's presentation materials, the summary notes, as well as the link to the webinar right after. You will also separately receive a request for your feedback on the webinar, the good, the bad, and the ugly. The form takes less than a minute to complete, so sincere request to please provide the same. If you're interested in in-house training or any other matters arising from this webinar, please do not hesitate to contact us. To conclude, thank you for your attendance today, and we look forward to bring you again with our next in-house council forum. Thank you.
Thank you, everybody. Thank you very much.